Hi, welcome to the Market Alert for 22nd of November, Wednesday, 2017, the day before the Thanksgiving hols. Wasn't going to do a market alert, but after yesterday's activity, just to bring you up to speed with what's going on in the pound, and really not a lot yesterday. You can see how sideways the market was. That's sort of the range that you had yesterday, and then the market's been sideways to higher on the overnight, and you can see the pound is nicely above the 20 bar average and moving back towards the upside there. It's got a few key areas to take out, this one and this one, in order to move higher. So we'll remove the 132.28 as that one's been taken out, and we'll just move this one across to here, and we'll save that. So they're the areas that need to be taken. There's also one here as well, if you wanted to be a bit more precise. There's one there as well. So that's the pound news today. What have we got? We've got obviously the budget for the UK. This is now dressed up as the autumn forecast statement. Don't know why, but it is. That's out at 12:30 p.m. So see how that affects the pound. Unemployment counts, core durable goods. Oh yes, of course, it's Wednesday, isn't it? Don't expect much reaction from this one, as of course it's going into the Thanksgiving in the US. Wouldn't expect anything at all. Everything else is out apart from the revised UM and the crude oil inventories. It might be interesting to see what's going on with crude, how it reacts given what's going on in Saudi Arabia at the moment as well. And in the Dow, well, you saw what happened yesterday. The market was up 150 points in the pre-market session, indicative of Thanksgiving. Nobody around, as I said in Monday's alert, thinking about the holidays, move the market higher, protect the bonuses, Santa rally, all that. Been going on about it for weeks. A couple of buy signals at the beginning. We saw the professional buying. Selling pressure came in at this level, which is the 23,550. Market struggling here, absorbing the selling as it attempts to drive through. Once through, it's then free to move higher. You get the first bout of profit taking here, but what's interesting is when you get these bars, if you get a 50%, let's just take out the extend that. If you drop 50% below, you'll see if the selling is just short-term profits, the market won't close below the 50%. And this is the same as you'll see, just if I can get this to work, as we draw below all of these others, you'll see the market holding. And what it does is, what's even more interesting, is that 50% above, the market continues, as you'll see there as well. And then eventually, I'll just delete these extensions. You'll see as the market eventually comes back. So there is another trading strategy inside of these price bars. There always has been, and one that I should actually consider trying to put together to give more potential trades. For example, if the market fails to close below, draw it on the right one first, below the 50% of here, there's nothing to stop you going long 50% above or over these three bars and then taking the trade and going with the trade. There's also some very interesting things that happen with 76% inside of these, but not for this overview. And again, you know, the high point of an up thrust, if the market manages to close above, just starts to close above, bit of selling there, but again, you can see once it's above. So where you've got all of this potential weakness, if it's not closing 50% below, then it's likely the market's going to continue to move to the upside. The only thing here to keep in mind is that you do get a drop off in volume, and of course after the first hour it isn't going to be as accurate because the market's going to become sideways. But later on in the session you see the selling coming in, you see the spike in the volume here as prices move lower. This is again that very interesting price bar where it comes off the low in the bottom third, and then you see some buying coming in. The only problem is nobody follows through on the buying, and that's probably because there's been a panic on taking the profits and stops being hit. So that's what you're seeing there, and then the profit taking follows through as we head into the weekend, Thanksgiving holidays and most people would either hedge or be out of the markets, and there you can see a bit more profit taking with the green bars there. So once you get used to seeing this sort of activity, you can read the markets very well in what's likely to happen. So on the overnight, again, the Asian market, we see this chance to move the markets to the upside, but of course we've got no follow through, and now just drifting back. So it allows the high frequency traders just to run the markets up and then take the profits and get out. In the daily charts, well, we're heading back to the all-time high. I'm surprised this wasn't actually hit yesterday, 23,621. No doubts, half-day trading today, there's a possibility that is likely to happen. Just a quick look at the implied volatility before we conclude. And so on the implied volatility, back to the normal chart, managed to work out what it was. It's the data table, has a set limit, I think, from what I could gather, and with a bit of fiddling about managed to work out what it was. So we're all back to normal, but thanks to those who got in touch with their suggestions as well, very much appreciated. So the implied volatility was 871 on Monday. Tuesday continuing to move lower as the Dow moved up higher by 160 points, 804, and heading back down towards these lows, which I said, and I hold my hands up, that I didn't think we'd actually see revisited. But who knows, maybe we're going to. I didn't think we'd see this, but we are. So, and again, the range of the implied volatility now is extremely narrow. If we just go out to a 2-year chart, you can see how narrow this range has actually become. Let me just click on there. So you can see here how range bound the market has become from, well, actually for the whole of the year, back to January. Incredible. And then you've got the move to the upside there. So as the volatility's dropped, it's allowed them to keep moving the markets higher. We know that because they've been selling the VIX on the CME in order to do this. So there we have it. That's it for today. There won't be one tomorrow. It's half-day trading on the futures. Markets close tomorrow. No point on Friday. So I will see you on Monday. Just a sort of a roundup of what's happened on the overnight in electronic markets during the next 2 days, and see how things pan out from Monday when everything returns back to normal. Okay, that's it. Enjoy the next few days, not looking at the screen, and I will see you in the next one. As ever, thanks for watching. See you in the next one.